Thank you. I'll be presenting the Q3 results for FY18. It was another quarter of good results, steady levels of profitability from the previous quarter's levels. Total revenues for Q3 were 1,443 crores versus 1,248 crores a year earlier. That's a rise of 16%. The total segment EBITDA for the company was 83.94 crores versus 69.77 crores a year earlier. That's a rise of 20% for the quarter. And profit after tax for the company for the group was 56.44 crores versus 41.43 crores a year earlier. That's a rise of 36%. And profit after tax, after minority interest for Q3 was 53.54 crores versus 36.86 crores a year earlier, a rise of 45%. Earnings per share for the quarter, Q3, was 1.6 versus 1.1 rupees, which was up 45%. And earnings per share for the 9 months, that is April to December 2017, reached 4.47 for 9 months earnings per share versus 2.67 9 months year earlier. So that's a rise of 67% this year, so far 9 months cumulative in earnings per share. Let me go through the segment analysis. First, Liquid Terminal Division. Revenues for the quarter were 40.3 crores versus 39.33 crores a year earlier, so steady. EBITDA for the division was 24.58 crores versus 23.56 crores, steady again. The Haldia Liquid Terminal remains strong, and the new Kandla Liquid Terminal, the project is almost complete. This was the 100,000 kiloliter project. Around 83,000 kiloliters is already complete, and the balance 13,000 should be completed in the next month or so. And this should boost revenues for this segment in future quarters. Our Gas Terminal Division revenues for the quarter were 1,401.8 crores versus 1,208.7 crores, 16% up year on year. EBITDA was 59.36 crores for the quarter versus 46.21 crores year earlier. That's a strong rise of 28% in the EBITDA for the gas division. And I'll go through the underlying sales volumes for the gas division, starting with the LPG terminal throughput volumes, not only for Mumbai and Pipavav LPG terminals, but our new Haldia terminal, which was also commissioned in Q3. The total throughput volumes handled at the 3 terminals was 542,741 metric tons versus 433,725 metric tons year earlier. That's a rise of 25% year on year. This, of course, includes, when I say LPG terminal throughput volumes, it includes all LPG handled at our terminals, including the public sector throughput, Reliance contract throughput, as well as our industrial distribution. And this record throughput of 542,741 metric tons, for the first time, as I said, includes the Haldia LPG terminal volumes. And good to see that as far as Haldia is concerned, it's ramping up strongly, including in this quarter, Q4, and we're going to see over the coming quarters, quarter 4, and then next year, the sales volumes doing very well. All indications from our customers are, at the moment, it is looking very strong as far as the volumes are concerned in Haldia. LPG sourcing volumes were 305,990 metric tons versus 350,418 year earlier. That's a decline of 13% in LPG sourcing volumes. Packed LPG cylinder volumes for quarter 3 were up 9%, that is 3,496 metric tons versus 3,207 tons earlier. Bulk industrial distribution was 11,546 metric tons versus 5,647 metric tons, a rise of over 100%. Auto gas sales were 6,015 metric tons versus 5,944 metric tons year earlier, so steady. So to summarize the LPG division, again, LPG throughput volumes handled in our terminals was very strong and has driven the 28% increase in EBITDA for the division as a whole. Now, finally, let me turn to the outlook for Q4 and the project's update. Starting with the liquid terminal division, we expect bigger revenues in quarter 4 as well as future quarters as the 100,000 kiloliter liquid terminal in Kandla will start. And we see this terminal in Kandla as one of the keys to our future growth in this liquid terminal business because it is a truly strategic port, Kandla, one of the busiest petroleum and chemicals port in India. And the significance of this project is enormous because with this phase 100,000 kiloliter project getting completed now in this quarter 4 and being commissioned, we see great scope for growth in traffic for future years. We also have additional land available. We can expand more than 100,000 kiloliters in the future, but let's at least commission this and then we'll see how things go. As far as the gas terminal division outlook is concerned, as I mentioned, Haldia LPG volumes have started in Q3 and we will see a big jump in Q4. We've already just seen January figures and there's a big jump already on the volumes compared to Q3. So we're looking forward to, as predicted over many earnings calls, a big jump in our LPG volumes in Haldia. Both HPCL and BPCL are customers and they've got strong offtake in Haldia. As far as Pipavav and the Mumbai terminals are concerned, both are operating at full capacity and we expect to maintain these high volumes through 2018. So to summarize, I think it was another good quarter, maintaining the high level of profits of quarter 2. The Q4 outlook to end the year is very good, drawing on the higher LPG volumes in the Haldia terminal. And already, as I mentioned, in 9 months, we have seen a 67% year-on-year rise in earnings per share. And as I said, the outlook for Q4 is looking very strong. So I can now take questions.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question at this time may press star 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. We have a first question from the line of Sandeep Matthew from SBI Cap. Please go ahead.
Yeah, hello. Good evening, sir.
Yeah, good evening.
So the first question was, related to your LPG sourcing business. You had mentioned in the previous call that, you might be able to provide a better update on the tendering status for the sourcing business. So any color on that as of this point?
Yes, I think not all the tenders are out yet. They are still a little delayed, even though it is 2018 is already started. So I'm not able to give a complete picture. For example, we're expecting another tender for the whole of 2018, probably in the next few weeks. So I will probably give a better update in the next earnings call as to what is likely to happen.
Yes, sir. And if you may, if you can provide the split in LPG terminaling volumes, how much was handled in Haldia this quarter, and at Mumbai and Pipavav, would it be possible to give that breakup?
Yeah, I mean, generally, I don't want to get into too much of this detail, but I will give you at least the Haldia figures. It was in quarter 3. It was around 34,000 metric tons was the throughput, and as I said, it's ramping up rapidly now in quarter 4. You'll see, and the Bombay and Pipavav. I don't want to get into this every time giving the exact figures, but rough, as I said, full capacity. So close to 283,000 tons in Mumbai and 225,000 tons of throughput in Pipavav.
Yeah, that was very helpful, sir. And now that Haldia is operational, what would according to you might have positively surprised you, or has there been any setbacks or something that did not work out as per expectations? If you could just give some color on how that once and now it's become operational, how things are progressing there.
Things are progressing actually better than expected in terms of, as you'll see, as we ramp up operations. Obviously, work was going on even in terms of some of the roads outside the terminal, etc., and the tanker movement, etc. But now that everything is completed, I fully expect, based on what I've understood from customers and even the offtake requirements for this quarter, I expect better than budget. Most of you will recall that I talked about the first year kind of on a run rate of around 500 to 600,000 metric tons for this year in terms of the throughput. I expect significantly better. I won't say more than that because it's too early, but I expect significantly better than that. And I don't mean 10% higher. I mean very, very much higher than what we had budgeted. And that's as a result of offtake from BPCL and HPCL.
Right, sir. And just one final question would be, what would be the mix of long-term and short-term contracts? Have we tied up any for the Kandla liquid terminal, sir? And what would be the anticipated rates that we should be factoring?
Too early again for the Kandla liquid terminal because I said we are just completing the project now, and we will be starting it. So I think, again, ask me that in the next earnings call. But it'll be the usual pattern that we have in Mumbai in terms of the liquid contracts will be of a similar pattern. That's because there will be regular customers that we have over there. So, but you can ask me more detail about that once the terminal is fully operational.
And any update on the status of the 2 new LPG terminals, sir? We were expecting some color on that also. So
again, not today, unfortunately, but at least one of those 2 which I think I mentioned in the last earnings call, is getting closer to kind of contractual stage of getting, so I mean all the main parameters have been negotiated and agreed, including the capacities, etc. So I would say with the main anchor customer, we are getting closer, but not today, not signed today, so I can't really say anything, but getting much closer. So again, let's when it's done, then we will be announcing that. But it will be, at least what I can say is it will be, that project will be the largest LPG terminal that Aegis has done. That project will be the largest Aegis has done in its whole history. So it's a very exciting project. The second project after that, that is still some time away because we are still negotiating a few things on that. But again, I think in 2018 you will hear most likely you'll hear us making announcements on probably both those projects.
So is it commercial, or are commercial negotiations the reason, or is it approvals which are
commercial negotiations are almost concluded on the first project. So now it is just the legal agreements, and on the second project the commercial negotiations are still going on.
Thank you, sir.
Thank you, sir. We have next question from the line of Pritesh Chheda from Lucky Investment Managers. Please go ahead.
Yeah, congratulations for good numbers. So just wanted to understand what will be the expected utilization level of Haldia next year, or that is FY19. And in initial comments you said that Pipavav is also 100% utilized, but at 225,000 volume this quarter on a 1,400,000 type capacity, I don't think it's fully utilized, right?
We are, because obviously this project has just finished in terms of the new spheres that we completed in the last quarter. So obviously, when I talk about Q3, because those spheres were just finished towards the end of Q3, so that's why I said the storage capacity that we had for most of Q3, it was fully operational. Now the new tanks which we have finished, the spheres, that will further boost the capacity, but that will come into Q4. So then there'll be further room for growth in Q4 and future quarters. So as of Q3, it was fully utilized. Now, of course, since we completed the spheres in Q3, now there'll be more capacity, storage capacity, which means greater boost to throughput will come through. As far as Haldia is concerned, again, I think it's a little early for me to give you utilization rates in terms of the next financial year. For Haldia, I think it would be, again, sensible to ask me this question in the next earnings call when we will be at the start of the next financial year. But I can say, I've already said that we had initially budgeted for around 500 to 600,000 metric tons of throughput, and I just said that it's going to be much better than that, it looks like, significantly better than that in terms of what we've seen, the customer requirement. So I should have a better update in the next earnings call, which will be in May, because we'll have started, but it's going to be a lot better than what we budgeted.
Okay. And your drivers for the liquid business in terms of growth, so is any development happening on the Pipavav liquid terminals, because that's one driver for growth, or it is only Kandla which will drive your growth next year?
I think it's Kandla and the Haldia expansion. We have a 50,000 kiloliter expansion going on in Haldia liquid. So it is the Kandla 100,000 kiloliters as well as the 50,000 kiloliters expansion in Haldia liquid. These are going to be the main growth for the liquid revenues in the next year. As far as Pipavav is concerned, we are slowly making progress on the rail gantry, etc. But it's taking time as far as that is concerned. So I don't expect anything major to happen in Pipavav. The growth is really going to be in the liquid business from Kandla and from Haldia.
And lastly, I just want to check, you were referring to two projects to the previous participant. I actually missed it. What were you referring to? What are these projects?
Sorry, I missed I couldn't hear what you said. What was the question?
I said you were referring to two projects next year. To the earlier participant, you were replying for two projects. I actually missed it. What are these two projects?
Yeah, so what I've mentioned over the last 3 or 4 years, in fact, and I'm just updating on that, we had set out a strategy of building next 3 LPG terminals, one of which was Haldia, which has been commissioned, and then 2 more. And what I've been updating at every earnings call is the progress on these next two LPG terminals without giving too many details because obviously they're not yet signed. But I did say that the next project, the second one, is going to be a very large terminal, the largest one that Aegis has built. The commercials are all agreed now. The commercial negotiations are over. We are now at a kind of stage of contractual stage of the legal agreements, etc. So I can't. Nothing is signed today. So I have nothing else to say today. But that shows you that we are coming closer to the time when I can officially announce the project. But it's likely to happen in 2018. The announcement of that project. The third project, the third LPG terminal, that will take a little bit more time because those commercial discussions are still going on. But again, we are hoping that this will be announced sometime in 2018-19 financial year. That's the next phase of growth.
Okay. Thank you very much, sir.
Thank you, sir. Ladies and gentlemen, kindly restrict your questions to 2 per participant. We have a next question from the line of Naitik Modi from OHM Portfolio. Please go ahead.
Good evening, sir. Congratulations for a good set of numbers. Hello, can you hear me?
Yes, go ahead.
Yeah. My question is pertaining to the Goa port, whereby one of your peers is putting up an LPG terminaling capacity. So I wanted to have your perspective about the demand for that particular region, which I believe is currently met by the ports out of Bombay. So what, according to you, is the demand in that particular region which can be catered from the Goa port?
Well, 2 comments. First of all, I'm not totally convinced that the party that you mentioned is going to actually construct the LPG terminal in Goa. So
okay.
We'll have to see. Announcements are made. Whether they actually get carried out, we'll have to see.
Okay.
However, yes, Goa, actually there is a considerable demand, and I'm talking around possibly as much as 500,000 tons of demand,
okay,
which could be met from Goa port, because this caters to the bottling plants of the oil companies, particularly in northern Karnataka as well as Goa proper.
Right.
And you're right that today some of that is being fed from Bombay, some of it is being fed by Mangalore port. But
true.
If there was import terminal capacity coming up in Goa in the future, whoever might do that, then I think there is scope for demand. But nothing is yet. Let's say nothing is yet very firm in Goa.
Okay. So aren't we planning to put up one?
I'm not commenting on where we are putting up our next 2 projects. I just said that there are 2 further projects. So I will not comment on, obviously it's commercially sensitive about which port that we're doing. All I will say is both those projects at the moment are in the west coast of India. So there are obviously various options, but I will not be confirming which ports they are at.
All right. Thank you very much, sir.
Thank you, sir. We have next question from the line of Shaleen Kumar from UBS Securities. Please go ahead.
Yeah, hi. Thanks for the opportunity, sir, and congrats on the good set of numbers. I'm audible?
Yes, go ahead.
Yeah, thanks for the opportunity, sir. Yeah, so a couple of questions from my side, sir. So, sir, we understand that, you are regarding the new terminals, but in terms of the approvals, like environmental approval and the rest of the approvals, so are they in place when we're talking about new approval? Is there the commercial terms which are left?
So for the one of the projects, the second one which I mentioned, again, I don't want to get too much into detail because it's still premature, but actually most of the environmental permissions are actually in hand. So, and the commercials are already agreed. So we are just at the as I said, the drafting of the legal agreements. It's the lawyers involved now, and I would say that nothing's signed till it's signed. So that's why I'm not announcing it today. But actually, the environmental approvals mostly are in place, which means we could start construction straight away on signing of a potential deal.
Okay.
That's the good news. The second terminal, we are still negotiating the commercials, and we would still have to get the environmental approvals on that one. So that's going to take a bit more time, as I mentioned.
Got it, sir. Sir, any updates on HPCL Uran-Chakan pipeline?
No, unfortunately, no updates today except what they tell us, which is the Uran-Chakan pipeline, which they are constructing, the project is in full swing. They had, last we talked to them about this, they said they will be completing in March 2018. We are now in February. I don't think that's correct as far as I can tell, and my people can tell. So I think still a few more months before they complete that. But they are definitely approaching the end of that project, but I don't think March is likely. So maybe we'll check again, but I think that probably, to be very conservative, within the next 3 to 6 months, that should be completed. And that will then be very interesting for us because we have, as you know, we have already completed our bit of the pipeline from Mumbai terminal to the connection to HPCL refinery. We've already done that, more than a year ago. So we are ready when they're ready, but I would say in the next 3 to 6 months that should be finished.
Got you, sir. And sir, regarding this BPCL terminal, if you have any updates on BPCL terminal on the East Coast, is there any update you have regarding what's their status?
You mean in Haldia?
Yeah, in Haldia.
Oh, yes. Well, they have started. Obviously, they are a customer of ours in Haldia right now, but they have started some project work on their own terminal, but it's at early stage. So we are talking some years from now before they commission. So the deal with us was that, look, they use our terminal while that project is under construction, but they're at an early stage.
Right, sir. Right. Sir, IOCL is constructing this polypropylene plant in their Paradip refinery, which effectively take away their part of their LPG, which currently they must be distributing in the eastern region. So, will that be meaningfully benefit for you, for your Haldia terminal?
No, I don't think so. I think we've looked at the market for Haldia in terms of how much LPG is going to come from Paradip. We've looked at it from taking into account all of those factors, and we've looked at. But the bulk of the Haldia market is really going to be just imports of LPG through the port, through the terminals in Haldia, rather than from Paradip. So taking all that into account, I think that's a marginal factor.
Oh, okay. Got you, sir. And sir, there's been, regarding the Ujjwala scheme, there are positive and negative things going around, like given the government has increased their goal of from 50 million to 80 million connections. However, there have been news quoting that, the replacements are relatively low, or refilling is relatively low in terms of the Ujjwala scheme. So what do you have, or when you talk to your customer, do you have any sense on that, what's happening on the ground?
I have read some newspaper articles, etc. And look, let me just tell you on the ground rather than what you read in the newspaper. On the ground, LPG consumption is booming, including from below the poverty line customers all over the country, including in the northeast, where we have just started in Haldia. So on the ground, we are seeing huge increases in not only in new customers but ongoing refills on the ground all over India. And I think that the very fact that yesterday in the budget they talked about increasing to 80 million customers. That's the target. They've already reached 50 million and another, to go to 80 million over the next few years. Just shows the ambition of the government and the oil companies to connect up these customers. Now, I think towards the end of this process, when they get to really poor regions of the country, and I'm talking perhaps places like Bihar, etc., maybe Odisha as well, there will be pockets where, because they're very poor people, that they may not be able to afford refills at the rate of other places. But at least I would say that on the ground, up to now, we have seen no real significant evidence of that. There may be pockets where you might find that because they're so poor. However, we have an answer as far as Aegis is concerned. That in that case, it's possible when they don't have enough cash to buy a big 14.2 kg cylinder, we can offer them, even through our Aegis retail division or even the public sector can offer them smaller cylinders where the ticket cost is much small. So I think that's where for those pockets of very poor people who cannot afford to pay for the full 14.2 kg cylinder refill every single month, they can buy the smaller cylinders like 5 kgs or 4 kgs, etc. And we, for example, Aegis is now selling 4 kg. We're even selling 2 kgs. So this becomes much more affordable, and so the industry will find solutions. And I think the most important thing is get them using LPG, get them connected, get them used to it, and then as people become more prosperous. So I think one should take this as a long-term perspective, as the government has, that they want universal LPG. They want every household to be using LPG, and it's going to have a strong positive impact on demand.
Right, sir. Got you. If I heard correctly, sir, regarding your industrial distribution, the numbers are pretty strong. I just wanted to understand, is there a strategy? What's your focus on that side, and also on your auto distribution?
Yeah, I'll answer these last two questions, and I think we better turn it over because you had 6-7 questions, and maybe others want to ask. But anyway, as far as the industrial distribution is concerned, these are very regular customers of ours in terms of these industrial customers. We've been dealing with most of these people for the last 15 years. So obviously there are fluctuations in demand. We had a very good quarter, 11,546 metric tons in Q3 versus 5,600 tons a year earlier. So it does fluctuate depending on their production schedules. It's not like we are suddenly signing up another 50 customers or whatever. But I think that the idea is to just keep servicing these customers, and it depends on their consumption schedules. As far as the auto gas is concerned, we continue to follow a steady policy of building out, expanding the network, and I think that that is continuing. As I said, we have a good pipeline, and we just continue building that out.
Okay. Thank you, sir. I'll join back the queue. Thank you so much.
Thank you. Thank you, sir. We have a next question from the line of Dhruv Bhatia from AUM Advisors. Please go ahead.
Good evening, sir. So my first question was on, the sourcing volumes. They have declined from, 350,000 to almost 306,000, despite the fact that, your throughput volumes have increased. Any particular reason of this fall? Because, the LPG import data for the quarter has been that there has been a 10 to 15% volume growth.
What happens sometimes, there's no particular message in this, 305,000 tons versus 350. No particular message in that. It's just that this is the time of year when they're going to the new tenders for 2018. So, until that gets sorted out, there is, towards the end of 2017, which means December period, sometimes they're going through that thing that, should they delay some of the volumes until the next year. So I don't think you should read too much into it as far as particular quarterly numbers is concerned. It's more to do with going to the new contracts for 2018. And as I said, as I answered a previous questioner, that I think we'll have a better. They're still delayed already. Some of those tenders have not even come out, even though it's already February for 2018. So you do get some fluctuations, and we'll have a better idea probably in the next 1 or 2 months when those tenders come out that what's happening. But I think that's not really within our control when they bring out the tenders.
So you mentioned, the second thing was you mentioned the Mumbai throughput was almost around 283,000 tons. If I just annualize this number, it comes to even higher than your throughput capacity of 11 lakhs. And this is despite the fact that the Uran-Chakan pipeline has yet not been commissioned, so the evacuation through the pipeline would be much faster. So is it fair to assume that 11 lakh is a much conservative throughput number and you could probably surpass that?
I think I never like people annualizing based on 3 months, but I can just say informally that just shows you that how our operations has really worked to the limit, I would say, in quarter 3. I mean, I'm surprised at this figure, but it really has been a incredible performance to get to 2,932 tons in quarter 3. Without that, as you said, without the Uran pipeline, which means number of LPG road tankers every day has been going out. It's 24/7 operation. So I don't think you should annualize, but what I said was that I think we are operating at full capacity in Mumbai at the moment, probably more than full capacity. And it's difficult to sustain that every single day for 365 days. So don't annualize quarter 3. But we're trying to squeeze as much revenue and profit out of this terminal in Mumbai that we can. But it shows you how strong demand is.
So, and on the liquid terminal, apart from Pipa's lower utilization, are the other terminals running at full utilization? Because the growth, if I just see the growth. I think because the Kandla and the Haldia are yet to be commissioned, the growth, I understand, will come from those new terminals. But from the existing terminals, is there any further utilization, increase possible?
No, I think that they're all, except for Pipa, they're all operating at pretty much full capacity. That means Kochi, Haldia, and Mumbai. Sometimes you do get some changes in product mix depending on which cargoes, which products, and we have different charging for different products. So you might see some changes in revenues and margins because, depending on which products come in. Bulk petroleum, we charge less than certain chemicals, specialty chemicals, etc. But generally speaking, until we expand capacity, that means more tankage in Kandla and Haldia, difficult to see greater revenues, which is why, for example, in Q3 you saw steady revenues. So the nature of the business is that only when you're operating at pretty much full capacity, unlike LPG, you need to build up more capacity if you want to see greater revenues and earnings, which is why Kandla is so important, why Haldia is also very important for the future. Also, of course, we have our project in Mangalore coming up as well. So, we continue to build this necklace of terminals, and there is extra land in Kandla going forward. So we will look at that in future to expand even more. That's why it is important to continue to build capacity in this division.
And just one clarity on your earlier point you mentioned. Did you mention that for FY18 your throughput volumes from Haldia can be 5 lakh tons, or was it for FY19 onwards?
Well, what I'd mentioned was that when we had budgeted for the first year of operation of this Haldia LPG terminal, which I mentioned even when we started the project, when I made the presentation, we had budgeted for a 500 to 600,000 metric ton budget, in terms of volumes. And what I'm saying, so that was a 12 month from operation. So let's say the run rate. So it wasn't for any particular financial year. And obviously we started this in Q3, the Haldia LPG terminal. So, you can take it from Q3 of FY18 to Q3 of FY19. The budget was for year one of operation 500 to 600,000. What I said, and I repeat one more time, is that I'm not giving a exact figure today, but I think we will be significantly above that budget for that 12-month operation.
Thank you so much, sir. Thank you.
Thank you, sir. We have a next question from the line of Kashyap Javeri from Emkay Global. Please go ahead.
Congratulations, sir, on a great set of numbers, and thank you for the opportunity. I'm just looking at, this chart that you gave in your presentation about LPG demand and supply in India. As of today, we are importing roughly about, 10 billion tons of LPG. Now, if I look at our capacity will be about 5 billion ton at the end of this financial year, so we would be like almost about taking about 50% market share. On the top of that, we have aspiration to add 2 more terminals, in FY19 and 20. So, what kind of market share are we targeting in this importer? Or is the aspiration that, as and when this market, expands, matching the demand and supply side through imports, we want to take the maximum market share out of it?
Yeah. So I think if you look at that chart, which I think is on page...
So page 9 and in conjunction with 12.
Yes. So page 8 according to my presentation.
Oh, okay. Okay.
Yes. If you see that in the last financial year, 2016-17, it was about 10 million tons of imports. You're right, and this year the imports will go up further. And we're saying that the projection, very conservative projection, by the way, by FY35 is for about 16 million tons. By the way, on a more optimistic scenario, that might be 20 million tons in terms of the imports instead of 16 million. So don't get too caught up into one number, but take a range of perhaps between 16 to 20 million tons for imports by the end of that period. Okay? So that's the first comment, that, depending on what scenario you run, you probably are looking at. Now, in terms of the capacity that we build, for example, in Haldia, 2.5 million ton capacity, that capacity is inbuilt right now, but we're not saying that today, in 2018, that is all going to be used. That is going to build up over the next 5 years or so, before which we reach that 100% capacity of utilization of 2.5 million tons. Okay? So, in other words...
sorry, could you repeat that?
The
last part.
We have built a terminal in Haldia which can today have a throughput capacity of 2.5 million tons. Correct?
Right.
What I'm saying is that it's not the case that 100% of that 2.5 million tons will be used this year. We've just started the terminal. What we have always said is that we build in that capacity, but the customer's offtake will take about 5 years to reach that kind of figure of 2.5 million tons. For example, I just said the budget for this year was 0.5 million, 0.5 million ton to 0.6 million ton anyway. So it will take time. And in the same way, when we build other terminals, although Pipavav and Bombay are going to be probably at full capacity, but when we build the new projects and we build out more capacity, you will see those capacities that I'm talking about. Again, it will take some years. We build in the capacity because you have to, when you build the project, you put in that much capacity, but it will be some years before the volumes actually reach 100% capacity utilization. But I think the intention is, if you ask me the market share question, the intention is to take around 25 to 30% market share of India's imports. That's the goal. I think that's a reasonable goal based on what we're building in these LPG terminals. And I think, as the demand goes up and as the imports go up, that leaves you, 10, 15, 20 years worth of capacity to use up in terms of these kind of imports. So to summarize, we build in the capacity right at the start of the project, obviously, build up as much as you can, but the utilization has years to go until it reaches 100% capacity utilization, particularly for the new projects.
And the same goes for the two new projects that you highlighted in
very much so. That, for example, I mentioned one of the new projects is going to be the largest LPG terminal that we have ever built, or we will build so far. And that's going to be a very big capacity, but it's not going to be, we'll build that in right from the beginning. It doesn't mean that all of that will be used 100% day one. It will take a number of years. But you build these terminals for next 30, 40 years. That's why you build it up right now. But
right.
It becomes extremely profitable once you've sunk the cost. And then obviously the more volumes, as you see in Bombay and Pippa, now you'll see in Haldia, it becomes extremely profitable. But the idea is to build as much capacity as you can at the time of when you're doing the project.
And you mentioned about this 20 million tons. Now, if I apply 30% market share, we are looking at like 6 million tons, of which we would already have a 5 million tons. So the next two projects put together, can one assume that will be totaling up to that number?
I said that it could be. We might end up having higher market share than 30%. That's our target. It might be that we will, even though we have more capacity, we will not be at 100% on every single terminal. So, by 2035. But as I said, we are building these terminals for next 30, 40 years. So you should not even get tied into only 2034, 2035, which is the last date of this graph. We will have enough capacity to handle India's LPG requirements for next, as I said, 30, 40, 50 years. And after that, I don't think we can predict. But so I don't think you should just get tied into, because this graph says 2034, 35, that's it. But when we build the terminals, we will build up enough capacity, and we will see where we get to. But I think a reasonable target for us, Aegis, is to take 30% market share. That's a reasonable target. And actually that target, as I've said, I think in the last, since 2014, if you go back to some of the presentations and earnings call, I've said that our target of 25 to 30% market share was by 2020, which is in 2 years' time. So that gives you some sense. So I'm not making a market share prediction for 2035. I'm really talking about by 2020, which is in the next 2 years. That was our market share objective.
Sure. That's it from my side. Thank you very much, sir.
Thank you, sir. Ladies and gentlemen, due to time constraint, that was the last question. I now hand the conference over to Mr. Anish Chandaria for closing comments. Over to you, sir.
Yes, thank you very much for all the questions. And I think that in the next earnings call, which might be after in May, after the audited results, we will have further updates on all the things that I mentioned today, and of course we'll see what happens on the future growth projects. But we'll be able to update, as and when things are ready, and then I think people will be able to see with great interest the details of those projects. Thank you very much for attending.
Thank you very much, sir. Ladies and gentlemen,